When is the economy going to recover? That is the question on everyone's mind. Hi, I'm Amber Almond Hall with the Walker Hall Group, and let's talk about the National and Utah Real Estate Market Update Report right now. Let's first talk about the national status and economics. First off, major financial institutions are calling for recovery in the second half. We've got 4 major financial institutions here: Goldman Sachs, JP Morgan, Morgan Stanley, and Wells Fargo, and their projections for the second quarter this year through the end of the year. What we know right now is the first quarter has come in. In this initial advance estimate, GDP constricting or being negative 4.8, and then this wild ride down here in the second quarter. Even now, as we start to talk about businesses coming online, still a lot of economic activity slowed across the country. And then as we turn the corner to the second half of the year, in the third quarter, 3 of the 4 institutions are calling for positive economic recovery. And then in the fourth quarter, 4 out of 4 of the financial institutions are calling for positive economic recovery as we go forward, as we start to come back online with businesses. Something unique right now, though, are the 3 sciences that economists have to consider. The first is the business science, and that's what they're normally used to doing. And that's answering the question, how has the economy rebounded from a similar slowdown in the past? We are in a unique time right now where we've got to layer on 2 additional sciences. The next being the health science, and that's answering the questions, when will COVID-19 be under control? And will there be a flare-up of the virus this fall? And taking that into account as they're making projections. The third part is the people science, and that's after businesses are fully operational. How long will it take for American consumers to return to normal consumption patterns? And so, while we'll deal with this situation that is the coronavirus, economists are dealing with answering a lot of questions on these projections. But what we can be confident in is no one is calling for an L recovery. We've heard the terms U and V, but an L recovery is when the economy goes down and it stays down. And this is not what we want. The good news is no one is calling for that. Sam Cater, the chief economist at Freddie Mac, says, although the uncertainty of the crisis means forecasts of economic activity are more unclear than usual, we expect that most of the economic damage from the virus will be contained to the first half of this year. And going forward, we should see recovery starting in the second half of the year. Utah is in a great position. We've seen lower than average levels of confirmed COVID-19 cases and hospitalizations. Utahns adapted quickly to working from and staying home and have innovated quickly to keep as many things moving forward as possible. Good job, Utah. We were just downgraded to yellow, which allows more businesses to open, larger crowds to gather responsibly, and while we continue to monitor COVID-19 cases. We know we started this year stronger than ever. We're at record low interest rates. Equity is strong among homeowners, and because equity is strong among homeowners, even if people are faced with having to sell, we don't expect to see a lot of short sales or foreclosures. We're also still facing pent-up buyer demand, and through all of this shelter in place, homes have continued to be listed and put under contract. Let's take a look at the April 2020 statistics for Utah. Median days on market was at 12 days, which is down from 20 days last year. Homes sold was down 19% from last year, which we've expected because March ended with shelter in place and held a lot of uncertainty. Inventory is still down from this same time last year. When inventory is down and demand is up, this is where we see pricing hold steady or continue to appreciate. We started 2020 off in January with record low inventory and are still seeing this today. Our median sales price is now at $337,000, which is also up from last year's $317,000. Frank Martell, president and CEO of CoreLogic, is quoted saying, "The CoreLogic U.S. Home Price Index is predicted to remain largely unchanged over the next year or so after a long uninterrupted run of appreciation." Although the economic fallout from lockdown orders put in place to fight the spread of COVID-19 will be profound, the basic supports for a rebound in home purchase activity remain in place. Once the shelter-in-place policies are lifted, we expect millennials who submitted home purchase applications well into the crisis to lead the way back to a positive purchase-driven housing cycle. And guess what? Salt Lake City and Provo, Utah were both just named as cities poised to recover quickly in Forbes magazine based on a study done by Moody's Analytics. The study was based on things like growth before COVID, diverse economic growth, education levels, job demand, and geographic factors. We're not anticipating that Utah will see a decrease in values this year. Values start to decrease when we start to have more inventory than buyer demand, similar to what we saw in 2008, but so far that just hasn't proven to be the case. We have a higher demand for purchasing than selling in Utah. Something I've been saying for a while, even before COVID was a thing, is that if you've owned your home for more than 2 years and haven't done a home equity line of credit or cash out refinance, you have equity. If you're facing challenging times with the current economy, you have options. Likewise, if you've been mostly unaffected by COVID and you think it's time to make a change, it's still a great time. We're working hard to keep our clients safe, healthy, and informed always. Have questions about your personal situation and what is right for you? Give us a call. At the Walker Hall Group, we help our clients buy with confidence and sell with success, especially during a pandemic.